Hi, I'm Lawrence from Trinity Finance. I'm just going to be talking to you today about a specific type of mortgage called joint borrower sole proprietor or joint borrower sole owner. Now, these types of mortgages are specifically designed for people that are trying to either buy or remortgage a property, but maybe have a slightly lower income than needed, so they can't get the affordability they need to get that mortgage, or a slightly lower credit score, so they need help boosting their credit score to actually get the mortgage through. So the way these applications work is, let's say for argument's sake you're buying a £300,000 or trying to buy a £300,000 house with a 10% deposit. You need a mortgage of £270,000, but your income is not high enough to support the affordability to get that mortgage. You may have a parent or a brother or a sister, or in general anyone that may be able to go on that mortgage with you but not be the owner. They will just be on it to boost the affordability, and this is where the joint borrower sole proprietor mortgages are absolutely ideal. So the way they work is you have 2 or up to 4 people on the application, so potentially 4 incomes to support the affordability, but maybe only one owner of the property. So literally one person will be on the deeds. What this also means is, from a stamp duty perspective, if someone else was going on the mortgage with you and they already own a property, then there would potentially be an additional stamp duty surcharge, which is currently 3%. That wouldn't be payable because those people would not be on the actual deeds to the property. You would both be on the mortgage, so you are both jointly and severably liable for the mortgage payments. So there are some pros and cons. One of the cons would be that if you did not pay your payments, the other person on the mortgage would also be liable for those payments, and if payments were missed, it would affect their credit score as well as yours. So you have to be very careful with things like that. It can be used for residential properties or buy-to-let. So you could be looking to buy a buy-to-let property, but you don't fit the lender's criteria. By adding someone else onto the mortgage application, you then fit the criteria and you can buy the property you want. So they're ideal for getting you onto the property ladder as a first-time buyer, remortgaging if you already own a property. Maybe you were looking to take someone off of a mortgage but can't afford it on your own. Or potentially selling a property and buying another property, moving up the ladder. If you would like to get any further information on these types of mortgages, please feel free to get in touch. You can use the contact form on the website, which is www.trinityfinance.co.uk, and we can make sure one of our specialist advisors get back to you as soon as possible. Alternatively, you can email us at info@trinityfinance.co.uk, or if you prefer, pick up the phone, give us a call on 01322 907 000.